Today, lawmakers finally get a chance to grill some key players in the recent GameStop trading frenzy. Our next guest says that the short squeeze drama that played out was not one of David versus Goliath, but really one of Goliath versus Goliath. She's going to explain that to us in just a moment. She was a guest on Democratic Representative Alexandria Ocasio-Cortez's live Twitch stream last month and talked about this very issue. Joining us right now is Alexis Goldstein. She's a former Wall Street professional who now works as a senior policy analyst at Americans for Financial Reform. Alexis writes about the financial markets in her newsletter, Markets Weekly. And Alexis, it's good to have you here. Thanks for joining us.
Good morning, Becky. Thanks for having me.
Let's talk a little bit more about your background, because I think that's an important thing that people need to understand on how your opinions have been formed on this. You're a computer programmer, and you worked at a lot of the big Wall Street firms, including Morgan Stanley. What did you do there?
So I was a programmer at Morgan Stanley. We developed a software platform we gave away to hedge funds for free in order to try to solicit their order flow. Then later on, I moved to Merrill Lynch, where I became a business analyst and was the interface between the equity derivatives flow trading desk and the technology team, helping build their internal risk management software and their trading platforms. And then I did the same thing at Deutsche Bank.
So let's talk about first your time at Morgan Stanley, where they were building this this program that they would give away to free for the hedge funds. Why? Nothing's ever free. Why would you give this away to hedge funds for free?
So you can think about it, it's in some ways similar to the Robinhood situation, right? The flow of institutional players, of retail players, is very profitable for firms that execute lots and lots of volumes of trades, because it's a volume business. And if you are able to get better execution than your competitors, which I think Morgan Stanley was confident that it was able to do with their sophisticated software and, very fast speeds and various trading algorithms, we could make money off of the volumes of institutional players. And that included hedge funds. And so we wanted to solicit more of their trades to come to us than, say, our competitor, Goldman Sachs.
When you say that you think this is a Goliath versus Goliath situation, what do you mean? You don't think that these were retail investors on the other end of the trade?
So I think Wall Street guards its positions ferociously, right? They don't want you to know what their position is, but they spend a lot of money to try and figure out what their competitors' positions are. And here we had tens of thousands of retail traders posting on the internet not only what their positions were, but what their plans for their positions were in the future. And I think it's highly unlikely that that kind of data would be unused by large Wall Street Goliaths. I think it's probably likely that hedge funds and other major players were watching what the plans of these retail traders were and trying to figure out how they could profit from it and probably ride the stock all the way up and then ride the stock all the way down. Because look, at the end of the day, the traders that I used to work with at Merrill Lynch and Deutsche Bank, they had their best days when there was extreme volatility and huge price movements. And if I were to make a guess, and I don't have a crystal ball, I think the first quarter earnings for a lot of these large Wall Street firms that have the kinds of flow trading desks in options and equity options like I used to work on are probably going to have a really good quarter because of this volatility.
It's complicated stuff. Washington's going to dig in today, and complicated stuff like this is not always something that's easily discerned through one of these hearings where people have a set number of minutes that they can talk, and a lot of them are trying to grandstand and make attention and get names for themselves. What advice would you give to these lawmakers if they are serious about trying to reform this? What would you tell them?
Well, I think that this is an issue that has the potential to bring a lot of attention to sort of an under-regulated market, which includes hedge funds, right, which are regulated, but they are less regulated than the large major banks. And so I think questions that will sort of bring out some transparency into the practices of, say, Citadel LLC, or to the extent that they want to talk to Melvin Capital. I'm not sure you're going to get too many questions directed at Melvin Capital today. I think this is a good opportunity for Congress to sort of set the agenda of how they want to respond to this and ask the question, do we need more regulation? Do we need more transparency? Do we need changes to the kinds of things hedge funds are reporting? And do we need changes to the over-the-counter markets? Because let's not forget, there's a whole marketplace that is not available to retail traders, which is the over-the-counter options market. And I think the regulators are probably going to be asking questions about what were the volumes of options trading in these over-the-counter markets that are totally inaccessible to retail investors. And I think you might see some questions today from Congress about that.
Alexis, we're about out of time, but if you had to pick one thing that struck you as the weirdest practice on Wall Street that didn't make a whole lot of sense, what would it be?
They would try to guess which of their interdealer brokers were in violation of the rules about gifts. So they would often get like bottles of champagne at the end of the year, and you could only give them a gift that was worth $100. And at sort of on a slow day, they would Google it and see who cheated and who broke the rules. And if they found out somebody cheated, they were sort of like, good job, well done. So that was one of the weirder things I thought.
Alexis, we'd love to have you back. I think you have lots of insight about what's happening, and we're going to be following this pretty closely. But thanks for your time today. It's good talking to you.
Thanks for having me.